Good afternoon, everybody. Welcome to the TraderMerlin show. I might be a little bit ahead. I started the stream and started the video. I think we are ahead on today's show. Anyway, happy Tuesday night, everybody. Hope you all did well and got not whipsawed during today's action. Now, we talked about that CPI number on yesterday's show. Of course, just so you know, tomorrow you have a retail sales number, which could cause almost as many volatile swings today as CPI did. And then on Thursday, you have the PPI number. But most guys focusing on the CPI number, which is the topic du jour for today. Thank you for the AI graphics comments. Yeah, I typed in inflation and I got like 5 or 4 pictures. Most of them were pretty stupid. This one I thought was kind of cool. It didn't say inflation on the top. I wrote that one in. So most of it's AI and I just augmented the rest of it. But I guess the topic du jour needs to be about those CPI numbers, what they mean, what the expectations were. I personally felt like they raised the number too high. They were showing a 0.5% gain. Yeah, it just feels like they lifted that too high, so the market, giving an excuse for the markets to rally. So let me show you what the data did, and then we'll move on from there. This is your economic calendar for today. So I'll run through the economic calendar, then show you the charts. If you look at the bottom part here, you can see down here at the bottom, we've got our CPI data. Of course, this will probably advance the slides on me, but I will try my best anyway. Come on. This stupid tool always drives me nuts because I can't get there. It is. Down here near the bottom, CPI. So we were expecting negative 0.1, or sorry, previous was negative 0.1. We were expecting 0.5. I was actually expecting 0.4, 0.3. I just didn't think that inflation had bounced back up that much. But in fact, they were right with their estimates. We came out at 0.5. So this is obviously not a very good picture for the markets because we were trending down with regards to inflation. Now, you can notice also the that was month over month. Below that, you have the year over year, which was expected to go from 6.5% down to 6.2. Well, we didn't make that. We actually came out at 6.4% on inflation. Good news being it's still dropping. Second one is it's nowhere near the expectation that they thought. So let me show you the charts here just so we can see visually what happened. This is your month over month, and the 0.5 mark that you see here on the hard red edge, that's obviously lower than what we saw for most of 2021 and 2022, but still it's somewhat high compared to what we saw all the way back here on the left-hand side of the chart back in 2015 through 2019. Only a couple ticks that hit 0.5. Other than that, everything down at around 0.3 or 0.2. So that was the realization was today was 0.5, in line with expectations. This is where I guess the market just didn't know what to do, and I'll show the market reaction here in just a second. But the volatility was all over the place because it's like, well, what the hell do we do? If you look at the chart here, you can see the very tip of this blue bar is what they expected. Expected that to be, or sorry, that's what it came out at. It was 6 point. They expected 6 point. Geez, Merlin, get my numbers right. Yeah, expected 6.2, and we came out at 6.4. So the little gold mark here is actually where we expected inflation to be. My graphics are off again. Sorry about that. We'll just take this bad boy and move them off. The little gold dash bar there is what the expectation was, and then the blue bar representing where we're at. So while we still are trending down, the rate of descent on the CPI numbers is not what everybody wants it to be. So all in all, what does that mean? It basically means that things are still on track. You are still seeing inflation drop. And even if you annualize the 0.5% month over month, so we take this number and you annualize this, you're timesing this by 12, you're looking at 6% inflation. So, I mean, all in all, that doesn't seem too bad. However, some of these old spikes here, these ones right here was up over 1, that's still stuck in the system. So as soon as those drop out of the annual, you'll see the annual drop. I don't know if you guys all understand what I'm saying with that, but let me see if I can draw it out here. If I look at the CPI month over month, right? That's what I'm looking at here. So I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So notice all these bars from here over. That represents the last year. And you have these ones here. So you got this super tall guy. I mean, these numbers are totally skewing that inflation number. So next month, when we get to next month's reading of CPI, what'll happen is this tall guy right here that I'm circling or scratching out, I guess, will disappear, and the new one will be put in place. So that one was up at a peak. It looks to be around 0.8. Well, if that one gets taken out, then and the next one's 0.5, then we have a net reduction in our CPI. So it's fairly clear to see that for the next 1, 2, 3, 4, 5 months, these 5 candles, which are pretty significant, there's one small one, but 4 of those 5 are huge and are skewing that inflation data. So in all likelihood, what we're going to see is this trend here on the overall year-over-year CPI keep on drifting down because the removal of some of those tall candles. Now the challenge becomes the tall guy, right? Get rid of those tall guys, leave it to the short people. The challenge now comes into what's that next set of 12 going to look like? And really, for me, I think it's going to start to change. Let's see, if this was February, January, December, November, October, September, you get back in, once we get into August of this year, then I think then inflation is going to get very interesting because we have all these small little candles, and that could put inflation somewhere down in here in the 3 to 4 range. And of course, that would make everyone feel much more warm and fuzzy, and the Fed could back off their policy. So while we did have some bad news out there today with inflation, it also was rather good. Now, the question is, what does it mean for the markets going forward, right? We talked about this morning. I did a session. By the way, for those of you who were in the session this morning, thanks for showing up. It was a lot of fun. We had Scott McCormick, we had Bashir Chaya, we had Jordan Matthews, we had Larry Jacobson, and Bill Addis and myself all just giving our thoughts on what we see moving the markets, what was interesting to us from different traders' perspectives. And then we did a kind of a round table where I was like, what's the dog that wags the tail for you? And I thought that was pretty interesting topic this morning. Anyway, most of us in agreement that we expect to see a lot of chop. Well, today's trading activity, let's go and just look at the S&P. Doesn't look like much on the end of the day candle, right? You have this, it's what's called a long-legged doji. You have a long topping tail and a long bottoming tail, and really price action didn't move too much for the S&P 500. If you look here and break it into, let's say, the 5-minute chart, man, you had some wild swings early on. As soon as that announcement came out, whipsaw. Now, I know that Skilled Stocksman is here, and early on you may have seen his comment where he's like, son of a biscuit, got knocked out early this morning. Might not have been his key words, but he says, another 8:45 a.m. Eastern whipsaw effing day. Knocked me out of a great Canadian dollar trade, run for a small profit instead of continuing on. This is it. I mean, you know that this announcement, CPI, PPI, Fed announcements, core PC price, and you know the reaction is going to be like this, Skilled Stocksman. You know it. You know you're going to get whipsawed. It's almost guaranteed. And even when that announcement comes out, no one really knows which way it's going to go. So you get this rampant speculation, and all of a sudden, if this thing starts to move up like it did right here, right after that announcement, it started to move up. And buy orders just flood in because, it's moving up, I'm buying. It's just like algorithmic computer systems just saying, if it's going up, buy it. If it's going down, sell it. And you get these exacerbated moves. You had a huge range. If we go from peak to trough, or let's go bottom to top here, trough to peak, on that 5-minute window is a 1.32% move for the entire S&P 500 in 5 minutes. If I split it into a 1-minute chart, it's probably even more exaggerated. So you know, brother, going into this, that is going to just hit you right in the face and probably stop you out of your trades, which is why the only real thing I enjoy doing, and this, again, is very dangerous, is when you have an announcement like that, I like putting buy orders that are way out of the money to catch those systems that are crashing price real quick, because normally it rips down and then rips back up. And it takes about 15 minutes before this chart normally will start to take direction, which is why I'm always recommending stay away from the announcement itself, wait 15 minutes, and let the dust kind of settle. Merlin, on that live event, no Valentine's Day for me. I'm a curmudgeon. I'm not a fan. Screw Cupid. Anyway, you saw that volatility persist for most of the session and then really just chopped and fizzled at the end. So at the end of the day, we ended up having pretty, I would say, decent CPI numbers, right? We did decline. We didn't decline as much as we thought. Went from 6.5 to 6.4, so we're slightly down. All in all, not terrible. And the markets were just going, what the hell is going to happen? What is Jerome Powell going to say on this? What's inflation going to mean? So we can go out and look at that CME site, and you're welcome for the link to the CME piece. I know some of you like that one. It's one of my go-tos for sure. And, in my session, my panel discussion, one of the questions was, what's the dog that wags the tail for the markets, right? Meaning, what's the most powerful piece? And right now, you're all going to have different thoughts on what is the dog that wags the tail. I think there's a couple. Number one for me is going to be the dollar index, and number two is going to be interest rates, right? And that, of course, leads to bond markets. So those pieces right now are driving the boat. And what's going on with interest rates? Well, here's the expectation for the February 22nd meeting. Really didn't change today, right? You're looking at a 90% chance of a 25 basis point increase tomorrow, or not tomorrow, at the next meeting, and a 9.2% chance of a 50 basis point increase. Now, you notice they really haven't changed much over the last week or so. So not that big of a deal yet. We'll see what happens in the next couple of days. Yeah, there's a March 14th. Yes, the men's version of it, right, Steve? We'll keep that politically correct. But there's steak and there's another piece that's missing on that one. But yes, that's definitely a better day than Valentine's Day. Oh, boy. I'm going to get myself into trouble today. I'll keep it clean. Anyway, that is the CPI piece. Now, of course, that's the one that you and I feel the most. And I saw a couple comments here. Big Eb says, sucks for renters right now. Yeah. I've known some people who moved recently, and it's extremely expensive to rent places. And I don't see that changing anytime soon, especially if the housing market starts to crash and we start to see a little bit of a pinch in real estate markets. You may see people selling and moving into rentals, and of course, that could drive those prices up even more. Tom says, CPI is listed at 6.4 versus 6.2 year over year. Since they round to one digit, that may be 6.35. True, if Major League Baseball did the same. Look, I've mentioned this before, is when you look at that data that comes out, so I'll bring it up over here. And for all of you who would like to know more about these data sets that are created by different agencies, you can just go to CPI, you click on the little envelope here, and it tells you it's from the BLS, right? The Bureau of Labor Statistics. Now, I've told you this story before, which literally left me, I don't know what the right term is, just kind of disenchanted with the trading world and information. Is we interviewed a guy who used to work at the BLS, and we asked him about these numbers because I'm looking at those numbers in an attempt to formulate an educated decision about where these markets are going to go. And I asked him, almost cynically, because you hear so much about, oh, they cook the books, they change the data, they manipulate. And I asked the guy, I said, so do you guys, manipulate the data or change the data sets? And he goes, yes, without hesitation. Didn't go, let me think about that one. What am I getting in trouble for? He says, yes, we definitely modify the data. And, depending on the political agenda, I was like, well, then how the hell are people like me and all the other traders that are using this information supposed to use it? Because you're modifying things. So yes, you're talking about rounding up there, but I don't trust this data anyway. I really don't believe that this is the actual number. I believe they're cooking it, trying to make us feel a little bit warm and fuzzy. And you may have heard some analysts on TV saying on how they believe that they modified the CPI to make it look like it was dropping very quickly when it actually hadn't, just to make everyone go, oh, wow, ooh, inflation's under control. Thank you, Jerome Powell. Thank you so much for fighting inflation. And you have to keep the masses somewhat calm. If the proverbial shit keeps hitting the fan over and over and over again, there's going to be some distrust. Not that there isn't already, but there's going to be massive distrust on the average person with regards to political leaders. So I think that the inflation numbers have been cooked a bit to make it seem a little bit rosier than it was before. I know, Lisa, they absolutely don't care about you, me, or anything. It's their jobs is what they care about, right? And if inflation stays high and runs out of control, then someone's going to get voted out of office, and they don't want that. So now all of a sudden, we're in a situation where we see this chart here, and you're like, oh, yay, great. It looks so much better. It's getting better. Yay! Well, you look at the long-term historical piece, sure, it is getting much better. It's nowhere near what it was before. I'll bring up a longer-term chart of this one so you guys can see it. Let's go all the way back to what all this, the most data I can get on this, which is to 2007. Oh, actually, I can go all the way back to 2003. We're getting back to a level that we saw high inflation in 2008. You mean that the government is not honest about the numbers? Yep. Here's the sad part. All of us that went to college had to take political science, and you believe that there's actually good being done for the American people. And I'm so jaded. I'm almost polarizing myself to one end of that spectrum on it. I just don't trust the data that comes out. I don't trust my political leaders, regardless of political affiliation. I think that for the most part, there is 100% political agenda. We could talk about cryptocurrency, which to me is the biggest political agenda right now, but I'm saving that for my class this evening for the CIL. But you look at this chart, and I think you'd all agree that every one of you in your mind is listening to the data going, okay, inflation's getting better. It's getting better. Okay, we're back on track. Whereas, are we really? I think we are getting better. I just don't believe that it's correcting itself this quickly. I'm not really sure. I don't see the actual numbers out there. But if you look historically, let's put my cursor on where you guys would deem the average historical number to be. Going all the way back to 2003 on Consumer Price Index, right? I would say that the average has to be somewhere down here around 2.5, which, you've heard the Fed say we're looking for 2 to 2.5% is our target. So if we look at where my cursor is, that little green crosshair, that's 2.5%. I would look at this chart and say, over the past 20 years, that seems to be the average. There were definitely times where we had deflationary action back in 2009. We had some deflation in 2015. But for the most part, we've been above zero. And even though we've had some big spikes, it seems like 2.5 is right around the average price over there. So there we go. The class in MBA was a joke. Worst decision was to get my grad. Really, NJ? You might be scaring me out of it. I thought about potentially going back just to have it. I don't really think I need it. I just thought it'd be fun to have that. But spending that much money for an MBA, not going to do it. There we go. Okay, rate increases will probably keep the market up as soon as they cut or threaten to cut down. Periscope seems a bit like the Fed is stalling to try to get a softer landing. Well, look, and this becomes that chess game where one piece is impacting another, impacting another, impacting another. That was my discussion point this morning with the roundtable discussion, if you will, about what's the dog that wags the tail. There's not one component, right? One piece turns another piece, which turns another piece, which turns another piece. So if we do continue to see inflation slide and it keeps dropping, then that obviously means that the Fed has more leeway on what they can do with interest rates. Because if they're raising aggressively, it's to fight inflation, right? The higher those rates get, the worse it is for the economy. It keeps that inverted yield curve. But if we get to a point later on in the year, let's say August, September, December, as the data we saw on this month-to-month starts to fall off that chart, right? Once these big bars over here start to fall out of the reporting data, we could see inflation fall very quickly to, 4%, somewhere in that ballpark. I think we'll probably bottom out there. So we get down like 4%. If that happens, the Fed no longer has to be raising rates. They can actually potentially stop and maybe even start cutting, because cutting it will start to flatten that yield curve out. And then at that point, the demand will probably start to increase for longer term bonds, and then we'll get back to a regular market economy. The question is just, how long is that going to take? And is there going to be a recession in the process? Listening to Scott McCormick today, love his presentation. The guy's brilliant. We've had him on here in the program. He says 6,100 is his target for the S&P. Like this year? When does that happen? I do think we're going to get to 6,100 on the S&P, just not this year, right? We all know markets are designed to go up by mechanics. So in the long run, sure, we'll hit 6,100 at some point. I just don't know when that's going to be. So you're right. There are a lot of different factors, Talking Monkey, that will be triggered or could be triggered by inflation subsiding or interest rates being increased. That all just adds more volatility to what we do. Now, the problem for me anyway is I don't have a real clear trend on these markets right now. So let me go through our top 7. We'll start at the bottom. You look at this market right now, it actually does feel like it wants to move up. Even though you look at this bigger picture downtrend, this is the S&P, by the way, for those who listen to the podcast. If you look at the market from January 1st of last year, it's been pretty much all downtrend. Now, we still are technically making lower highs. We haven't broken this pivot here, which is at 43.21. We did break this previous one. Actually tiptoed right into it, so we're kind of still at that high. And that was from back in December of last year. But we are starting to make higher lows, and that pressure looks like it wants to move to the upside. Again, challenging this 4,300 level would be great. Breaking that would lead me to believe we're going to move higher. But I don't think that's going to happen. I think we're going to get a lot more chop this year, bouncing back and forth, as was my forecast at the beginning of the year. But again, it really doesn't matter, right? You shouldn't be hanging any weight on what my opinion is. It's look at the charts for yourself, formulate your opinion, and then build a plan around what your action plan is, not mine. So let's start at the bottom, work our way up. Crude oil was your worst performer out there today, down 1.35%. But again, chop, stuck in that giant range right now, right? It's been since December. It's been stuck in that range between, call it 83 and 70. That's a big range, $13. But still, there's plenty of opportunity within that range should you decide to use options or, selling at the top, buying at the bottoms, shorting at the tops. Either way, there's plenty of opportunity there. Trading at 79.06 today, down 1.35%. Dow. Surprisingly, Dow felt like it was a little bit of an outlier today. Even though it was down 0.43%, I argue that this chart really hasn't done much. I drew this red line on here outlining based off the turtle traders piece, right? We talked about the turtle traders yesterday and kind of what their rules are. Well, going back the last 20 bars, it tiptoed across it today. Didn't close above it, but tiptoed across it. So I'd argue that's probably not a trigger for the turtles there. Oh, and by the way, I'm surprised nobody pointed this out yesterday. I finished yesterday's show and I was like, oh my God, Merlin, you idiot. You idiot. The fundamental thing about the turtle traders is this. They are a trend following system. I don't believe that I mentioned that yesterday, and that is the core of what they do. It's the trend is your friend. That is the absolute mantra of turtle traders. So everything I went over yesterday, I thought that was good information. Hopefully you learned from it, incorporated some of it into your trading. Remember, it's about the trend, and they're not interested in something moving sideways. So Tom Barr could never be a turtle. He loves things going sideways. If you have a nice, strong uptrending market, great. Then those rules I went through apply. Got a strong downtrending market? Great. All those rules apply. Make sure it's a trending market. It's a trend following system. I can't believe I didn't mention that yesterday, but sometimes in creating the content and producing the show and doing it live, I missed, I think I may have missed that piece. Anyway, let's go back to that Dow. Right now, you're looking at a situation in the Dow where it definitely challenged the highs of that yellow box range today, but ultimately ending down 0.43%. So a little bit of overhead there. Again, I think the next 2 days will ultimately determine where we're going to head. You got retail sales tomorrow, and then you have the PPI on Thursday. Here is your Russell 2000, which was down 0.05% today. Really just kind of an unchanged, choppy little nothing. Let's go there. Yeah, really no big change there, but long topping and bottoming tails. We had a nice follow through from that hammer that happened a couple days ago, but all in all, 1946 is where it closed. And same thing with the S&P. S&P picture looks just about the same, although the good news for anybody who's long on the S&P is it starts to, it's starting to challenge that 4,200 level. We might get there in the next couple days off of some good news on retail sales or PPI. Podium time. We actually have a positive day for gold, which has been somewhat shocking. It seems like it's just been sliding and sliding and sliding. I don't think that this is the difference maker or the point where it turns, but you had a huge indecision day on gold, although it ended slightly positive at 0.1%. Next, Tom, you're great. Next on our silver metal, NASDAQ. So NASDAQ was down most of the session. It was looking pretty great and then just came screaming back. The intraday on the NASDAQ is just nuts. I mean, grab a neck brace for that one. This is just huge swings back and forth for the NASDAQ. Finishing near the highs at 0.72% gain. Not too shabby thanks to some of the big tech names. But, I look at that daily chart here for the NASDAQ. And it looks pretty good. Some might argue this is a bullish flag where you got the big impulse move up starting back in January. And then our last couple weeks of consolidation. We'll see if we break through that. And maybe if I have time, I'll draw some nice little channel on that one for you as well. There's a book on the turtle traders. That's the one. Can you recommend a good book on the turtle trade? JB, there's only one book that you should buy, and that's mine when it's finally done. You can find a lot of great information on the web. Curtis Faith, I believe is his name. He's got a book called The Way of the Turtles, which most people, that's the one they look at. But you can find all the breakdown of their system online without having to go through it, although it's a very interesting story. I like the turtle system. My trends are just sided. True, but you're not scaling in it or anything like that. All right, and finally, oh wow, Bitcoin, BTC, an update for it. I'm not hanging my hat on this rally today for crypto. 2.88% up for Bitcoin at 22,335 on the day. So all in all, a fairly decent day for crypto, but I'm just not buying it. I think that right now crypto is in the sights of all the SEC members. It's like they got a memo and said, hey, whatever you can do to screw up the crypto world, we're going to do that. And, part of the talk track that I'm going to go into tonight, and I won't dive into it here, but, the SEC is going after stablecoins. So they went after one called Paxos, and there is a thing called the Howey test. And one component of that Howey test is in order to be a security, you have to invest money. Okay, great. You put your money into anything that's considered an investment. You put it anywhere, like you put it in a savings account, that's an investment, right? Because you have the reasonable expectation of making a profit. But if you buy a stable coin, there is no expectation to make a profit because you're buying something that's pegged to the US dollar. So how are you expected to make a profit if you're taking dollars and buying dollars that are digital? And so the SEC is going after Paxos, telling them to basically your stablecoin is going to die. You shut it down. They haven't sued him yet, but this is a very interesting one. And Paxos has said, we'll fight to the end on this one because we're not going to pass the Howey test. And I don't know if anybody saw any of the congressional testimony that went underway with Gary Gensler, but what's his name? Tomey asked him repeatedly, how can you say a stablecoin is a security? And he says, oh, well, we have lots of leeway in the laws that were given to us. He goes, I just want some clarity. Could you just tell me what you're looking at? Because you have these companies trying to do something legitimate and they come to you and ask for help, say, how do we do this? And you say, oh, we're going to sue you. You can't, you're basically threatening every business that comes your way. This is the big agenda. You have basically the markets are going after crypto right now. So I'm not feeling too comfortable with this move. Now, the good news here, why would you guys, if they're going after cryptocurrency, I'm gonna let you guys see if you can figure this one out. If regulators are going after cryptocurrency and they're like, we're gonna shut down stable coins, we'll shut down, staking, we'll just shut the whole damn thing down, why would Bitcoin be the best place to park your money? That's an interesting one. It's an interesting question. Why would you want to put your money in Bitcoin if the regulators are going after all the other cryptos, from proof of stake cryptocurrency, stable coins? That threatens the ecosystem. Why would Bitcoin be doing so well? Totally, Liz. It is you make up the rules as we go along. But here's the thing. I am going to arrest you for not following the rules. And once I arrest you, I'll establish what the rules were that you broke. That's the problem. Anyway, I'm going to talk much more at length about that in my CIL tonight. But here's the reason why. Ethereum, Paxos, Ethereum maybe not. Exactly, JB's got it. They can't touch it. So they can go and they can shut down Paxos because it has a centralized entity controlling it. They can go and shut down Coinbase or Kraken or Algorand or these cryptocurrencies that are not centralized. Or sorry, they're going to go after ones that are centralized. Bitcoin's decentralized. There is no one who runs it. You can't come to Merlin and say, hey, you're running Bitcoin, we're shutting it down. No one runs it, which is why it's such a beautiful thing. So many people say Bitcoin's old-fashioned, it doesn't work anymore, there's better models. There might be, but they are centralized. And therefore, Bitcoin is the most decentralized one of them. The government can't shut it down, they can't touch it, they can't do anything about it. That's the beauty of it. Now, as many of you are saying here, keeping your cryptocurrency on your wallet, your ledger, like these little devices right here, what's going on over here, is the best way to go. At this point, keep it all off exchanges for the next year or so until the dust settles out here. Wasn't Bitcoin designed to stay out of the government's hands? Yeah, it wasn't necessarily designed with that's the sole purpose. It's basically saying the only person that should have a say in your cryptocurrency is you. And I agree with that. Like if I've got $10,000 in the bank, that should be mine. They're just holding it for me. It's not theirs in any way, shape, or form. However, because it's in the bank has now possession of it. Therefore, it's technically the bank's money. Yes, I have insurance, etc., but it's the bank's money. And that's not the way it should be. Everything that you have that you've earned, you should be able to keep it. And now we live in a society where you are supposed to put what you own in possession, in control of somebody else, right? Let it be with that person and they're controlling it. Bitcoin was really written to prevent that problem or eliminate that problem and say, you own everything, it's yours, take control of it, nobody can shut it down. So that's why I'm becoming a Bitcoin maximalist. Yep, local Bitcoin's gonna be shut down. I tried to trade, but I can't risk anything, and in any product in futures over $600, can't risk it. Been burned before. All right. Well, I mean, if you're trading just the futures, you could obviously go to the micros. You go to it's fairly simple. I mean, remember this system was built off of futures. The turtle traders were futures traders. Now, they were predominantly using futures products, but you could easily apply it to any asset class. I think the rules are what's most important and sticking to those rules. That's why I kept emphasizing it over and over again. It's like, look, you can all take those rules and apply it, go down that list of 6 things that I wrote out there, and that's what should happen. And, for you skilled stocksmen, can't risk anything. You have to risk something, right? You can't risk nothing. You have to risk something. Because the worry there, skilled stocksman, is if you say you can't risk anything, then what's going to happen is you're going to start to take a losing trade, and that could turn into something monstrous because I can't take a loss here, and you keep holding that thing. So JB, I don't know about the ICT method. I saw that question before. I don't know about the ICT. I can look it up. I mean, I haven't even heard of it, to be honest. But what I'm seeing, what I've seen over my years is a lot of the stuff is exactly the same. They tweak one number, one input or output data point, and they call it their own indicator. I was tasked when I was in school to create my own indicator. And we just took some indicator and modified it a little bit, take a moving average and divide that by relative strength, and there's my indicator. It's just some silly thing. And that's what a lot of people do. They try to do that just so they can get some popularity, some notoriety. Not that that's what John Bollinger was trying to do. He just called them the Bollinger Bands because he was using it. And yeah, they're the Bollinger Bands. And now they're one of the more popular instruments out there. So I can look into that one if you want, JB, in the future. But right now, don't know. Who decides what the price of Bitcoin opens and closes at if it's decentralized? So what happens is you have exchanges which are trading it, right? There isn't one location that has it, but generally they're trading on exchanges. So if I have it on my wallet and I want to send it to somebody, it'll send that Bitcoin over, but it's pulling that price from somewhere. And it might be Kraken, it might be Binance, it might be some other exchange. That's generally where the price is being pulled from. So it's similar to spot Forex, where when you have spot Forex, you have so many different brokerage firms that the price might be different on different exchanges. What happens is there's computer algorithms now that arbitrage that. And if on exchange A, I can buy the dollar for 10 cents cheaper, then I'm going to buy as much as I can there until the price gets back up to the normal, and I'll sell it on the other exchanges and make a profit. That's arbitrage. That happens in the Forex markets between brokerage firms. It happens in the crypto markets as well. As a matter of fact, that's exactly how FTX got started. They were arbitraging between U.S. U.S. crypto markets and Asian crypto markets. Back in 2017, the difference between exchanges, I'm not kidding you, was over $1,000 per Bitcoin. Unfortunately, Bitcoin took so long to move, I never really got into it. I wanted to, but you could buy one on one exchange for, let's say, $3,000 and sell it on another for $4,000. You kidding me? Now, it's to take a couple hours to do that whole process, but that's what FTX got started doing back in the day. Let's see. I think I got all the questions there that came to me. Yep. Besides me, the savings and loan banking. Reminds me of the savings and loan? Well, the big thing for me is just understanding the fractional reserve banking system and kind of how our governments allow that. But you look at what's going on with crypto, and they're just shutting the door on it. This clearly tells me that they feel it's a major threat to their system, right? That crypto is a major threat to the major financial institutions. So when you look at the Fed, there's all this talk about a CBDC, which is a central bank digital currency. Some of you may have heard of what's called a synthetic CBDC, which is a CBDC created by somebody else that the Fed uses. Well, you look at Bank of America, multiple trillions of dollars under management. You look at BlackRock. Is it be okay? Yeah, there's BlackRock. Look at BlackRock. They've got trillions of dollars under management. So it's in their best interest to maintain their monopoly with regards to the financial markets. And if you start to let crypto in there, it starts to take away some of their power. I mean, currently, I'll just run through just so you guys I can blow your mind here. This is asset management, right? The largest asset managers in the world. This is assets under management. BlackRock is, how much do you guys think BlackRock has? I like when I get interaction. So of all the clients around the world that BlackRock has, how much money do you think they are controlling? Assets under management, AUM, right? What is it? You can throw some guesses out there. I'm going to see if I had prizes, I would give you prizes, but just see what you guys think. Type it in chat what you think BlackRock is got under management. Now, by the way, it is the largest investment asset management firm in the world. So they have more than anybody else, more than Goldman, Fidelity, Vanguard, UBS, Morgan Stanley, all that stuff. Oh, Big Eb nails it. Come on, did you cheat? You can't look it up, Big Eb. It's actually 9.6 trillion. 9.6 trillion for BlackRock. That's number one. Vanguard's at 8.1 trillion. And you look at Goldman Sachs, which used to be the juggernaut. This was the beast in the markets. Oh, JB says hundreds of billions. Pfft, no way. Way more than that. Goldman Sachs right now is at a measly 2.3 trillion. Now, that still is obviously a ton of money, but it just goes to show you how BlackRock has just grown to be the behemoth out there. I mean, it's almost 4 times as big actually, it is 4 times as big as Goldman Sachs with regards to. Well, that's a heck of a guess there, Big Ab. That's damn good. Anyway, all of these firms I just mentioned are directly threatened from crypto. So the next 6 months, next year, honestly, I think you're going to hear way more focus on the regulatory side and expect a battle. Right? Expect a big battle here because some of these firms have a lot of money. Coinbase has a lot of money. Ripple has a ton of money. Kraken has a lot of money, and they're not just going to sit there and let this die. Some of you may feel like this attack on crypto is actually a good thing. I'll tell you right now, it's an idiotic thing, because what they're doing is you're driving business out of America. You're now going to tell me, Merlin Rothfeld, I had money at Kraken. Like, okay, I have money at Kraken because I want to stake there. That's an American business established in America, just about to be publicly traded. And that business is making money and contributing to jobs, contributing to the economy, contributing to taxes, right? That's a big business here in the US. By telling them they can't stake, you're telling a customer like me who keeps cryptocurrency there with the intention of staking, you're telling Merlin, take your money, go take it out of US markets and go somewhere else. Where am I going to go? I can stake from my ledger. I'm going to stake from here. I will stake from decentralized exchanges, right? I'll go out to some decentralized online exchange that I can now stake from. And I'm now hurting American businesses. This is such a stupid movie. Right there, Margaret. Control it and tax it. I'm okay with that. But this whole just shutting it down, stopping it right away, and Gensler, this moron, calling it a security. It's like, dude, your own test says that it has to have the reasonable expectation of a profit. There's no profit in stablecoins. It's called a stablecoin. Anyway, I'm ranting. Talking Monkey says, on a side note, and speaking of banks, Credit Suisse is a monster mess. Yeah, so Credit Suisse and also Deutsche Bank. I mean, there's some banks that are just absolutely ready to go under. I don't think I had, I didn't have them on that list, but I'm sure that they're all kind of in the trouble. Fed's going after staking is like the Fed going after charging for parking in small town. It'll drive out retail. Yes, exactly. And that's what I'm like, man, this has the potential if we embrace it and put just clear rules. Like when Gensler was in front of Congress saying, well, I have a lot of leeway. So, it could be this, it could be that, it could be this, it could. I don't want could've. You run the agency that makes the laws. You are the cop. You can't tell me, well, that might be jaywalking. What's the term for jaywalking? You can't tell me, well, you're busted for jaywalking when I don't know what the term for jaywalking is. By the way, the definition of jaywalking is walking across the street that is controlled by two intersections, two controlled intersections. So if there's a stoplight on either end of that intersection and you cross that street, that's jaywalking. I know that because I crossed the street one time when there was actually a third intersection that didn't have the markers, and the cop tried to bust me for jaywalking. And I was like, I'm sorry, officer, but the legal definition of jaywalking is a street with two controlled intersections on, and I'm crossing between that. This is the third intersection here, and it's not controlled. So this is actually legal jaywalking. I got off, by the way. Know the law, and you won't get in trouble. Is it why they're trying to remove cash? It is hard to regulate. So, on this topic, and again, I don't want to make this a cryptocurrency show. I'm saving that for later where I'll go much more in depth. But understand that the government wants control, right? You all know that. You all know they want control over you. This whole, tracking Venmo transactions of over $600. I mean, come on. That's just ridiculous. However, they're tracking everything. They're trying to get a hold of as much information as they can about you. If you look at the richest companies in the world, the most powerful, richest companies in the world, it's about information. They control the information. They know most likely what you're going to do before you even think about it. I was over at my friend's house the other day, just to give you an idea of controlling information. And this should scare everybody here and make you think about technology. I was over at a friend's house the other day, and we were talking about air purifiers, because he just swears by his air purifier. He's like, my air is so much cleaner, and I have dust and dandruff for my dog. I've never looked at, thought about, or discussed an air purifier in my life. Now, I had an Apple Watch, and I had my cell phone. When I got home, I went online, and I'm seeing ads on browser tabs of just sites I'm going to for air purifiers. They're listening to every single thing that you do. Whether you believe it or not, this device is recording every conversation I've had on trading or everything I've been said forever. They're listening to everything that you do, and that information is all being gathered. A CBDC, or a central bank digital currency, is intended to do the same thing. They will want to make sure that they have control over everything that you buy, see. They'll know a lot more about the economy. But the danger here is the ability for them to shut you off. I'm going to say 99.9% of you are good, law-abiding, honest citizens that aren't going to do anything shady. Well, if you're using your digital wallet to buy illicit drugs from somebody and it's using the Fed CBDC, they'll know. They'll know where you bought it from. Are you using a VPN? I do when I trade. I don't really surf so much, so I don't really use it on a day-to-day activity. But the VPN, I don't think would have helped me. My phone was listening and knew that it's my phone and somehow brought it back to my address. That scared me. I was like, man, if you have anything you're discussing that might be borderline, don't keep your phones anywhere near you. I got served. Anyway, I like the idea of a central bank digital currency, and that's where we're moving. We will be a central bank digital currency at some point in the future. My guess is probably 3 to 5 years, we will no longer have paper money. It'll be a slow phase out. You've already seen that? You guys see all the signs at registers now? Sorry, due to the national coin shortage, we don't accept change or can't give you change. No, they want to force you to use credit cards. And then it'll go CBDC. Lori. I'm pretty sure it's all tracking somehow, man. It's all tracking. Unless you can take the battery out of your phone, which you can't do that nowadays. They're all locked into one. They're listening to single thing that you do. Anyway, so that's CBDC. It's going to come. And ultimately, what it means is the Fed will now have the most information with regards to human consumption ever. They'll know every single thing that you're doing. If they want to, they can immediately cut off your money. They can also make immediate deposits, so your tax return should be faster, but paying your taxes should be pretty quick too. No checkbooks, no nothing. It's all going to be on an app on some electronic device. I'm right there with you, Margaret. Yeah, it's this dystopian, Big Brother's watching. It'll be 1984 all over again. Kind of scary, but, it is what it is. It's just we have to understand the goods and bads of these things. It's definitely going to make it more efficient. I mean, the monetary system is very messy. It's very counterfeit. It's extremely expensive to design, produce, mint, store, transfer, and destroy dollars. Extremely risky. And now what are you going to have in the future? You can have someone that robs you, who grabs your phone, like, give me your PIN code, your CBDC, and they're robbing you for your electronic device, and then they know who it transferred to. And maybe this cuts down on crime as well. I don't know. Digital ID coming? Yes. Yep. There you go, Talking Monkey. We all know it. I mean, I could not believe I got home. There's an air purifier. Like, when I go to here to, so like right here, so I go to, Forex Factory. I have an ad blocker on this computer, but downstairs I don't. And it's like right here, talking about Forex Factory, and I got ads for air purifiers. Click on it and buy them on Amazon. I was like, I never even talked about an air purifier. Anyway, I'll leave it alone. I know, no more kid lemonade stands. You know what? I think we'll get back to the point where it becomes there'll be much more of a barter element in the economy. So the kid will be like, hey, trade some lemonade. What do you want to trade for? You got some apples in your backyard? It'll be a barter economy. Anyway, let me go back to your economic and earnings calendar for tomorrow so I can wrap things up because I got a lot to do. Here is your economic calendar for tomorrow. Today, obviously, was the biggest piece for the week, which was your consumer price index numbers. But tomorrow, you got some pretty good stuff coming out as well. You notice there's a ton of announcements. Right at the very top of the page, you have retail sales for the U.S. markets. They're expecting a pretty significant surge in retail sales numbers, which I'm confused on. I really am, because you would think that the November and December numbers would have been great. This is going to be the January spending. We saw bad numbers for November, bad numbers for December, negative. Now all of a sudden they're expecting it to go from negative 1.1% to 1.9%. That's a pretty big about face there. So you've got retail sales. You also have the Empire State Manufacturing Index numbers, and then a slew of big stuff after that. Capacity utilization rate, industrial production, business inventories, housing market index, crude oil inventories, and then the TIC long-term purchases, which is a very interesting one to see where money is flowing between this country and others. And that will happen 1 hour into the trading markets. 1 hour before the market tomorrow, though, we get that retail sales numbers. As the bell rings, you will have your, basically everything from 7 a.m. on here will be after the bell rings. Earnings-wise, do I have anything for earnings? I think I do. Oh, yeah, Roku, Cisco Systems. Again, Cisco is important because it's a member of all three indexes, the S&P, the Dow, and the NASDAQ. Twilo, Energy Transfer Partners, Kraft Heinz, the Trade Desk, and Larry's favorite, Trade Desk and Shopify are both on his list there. Okay, that's going to do it for me. Tomorrow, we were going to have none other than Mr. Larry Jacobson. We talked about the Trade Desk. We talked about Shopify and how we put that in his long-term portfolio and some of the things he was looking at. He says he's got another one he's going to talk about tomorrow, which, again, uses his kind of hybrid methodology, which combines fundamental analysis, technical analysis, and kind of that Warren Buffett value investing approach. So if you guys are interested in that one, let me know. Well, don't let me know. Just show up tomorrow. That'll let me know. As Lisa says, hit that like button if you enjoyed today's show. If you are new to the show, hit that subscribe button. And, of course, you can email me at TraderMerlin@gmail.com. But I'd recommend putting comments down below the YouTube videos. That's probably the best way to get questions answered, because I take them, copy, paste, and put them right into the slides. And I had a couple I didn't get to today, but I will get to those this week, I promise. So that's going to do it for today, everybody. Happy trading. Enjoy your retail sales numbers tomorrow. Skilled Stocksman, it's going to be volatile before the market opens, so be careful that early time. Justin Krebs is on Tuesday. Actually, no, he has not rescheduled with me. I'll let you know. He hasn't rescheduled. But this week we're going to have Larry tomorrow, and I'm going to have Sean Reed on Thursday. So the next couple days, you don't have to listen to me talk for an hour. I've got great guests going to be on the program. So I'll see everybody tomorrow. Take care.